Right, right. Okay. And I think it's worth mentioning, though, that there are household name financial institutions that are getting into this space. It's not, in other words, the idea of putting real world assets onto the blockchain. I mean, this is not some newfangled thing that is completely science fiction that is going to stay in the corner for 20 years. I mean, are you comfortable saying this is clearly the future of finance, this direction?
1,000%. Yeah. So I'll give you a good example. So Figure Technologies founded the Providence blockchain, and they have built a business in home lending, particularly around home equity lines of credit and mortgages. And what they've done is they have since issued literally billions of dollars of HELOCs. They're issuing a couple of $100 million every month in this environment because not a lot of people are doing cash out refis. If you need money out of your home, you're doing a HELOC. So from origination of the HELOC to distribution via a warehouse or asset-backed security, Figure has pretty much taken over 110 basis points out of the cost of that transaction. More efficient, less expensive. And because of that, they can offer lower rates to homeowners. And they can build a moat around their process that is a massive competitive advantage to every other home equity line of credit lender in the marketplace. And as a result, they've had 5 of the top 10 home equity originators adopt their software, which is all in Providence. They've already changed that industry. If you're still issuing HELOCs the old way, you're a dinosaur and you don't even know it yet. So you're seeing things like that happen. That's a great use case. Receivables are another great use case. Trade receivables, invoice receivables, they operate on we talked about trust versus truth. The reason receivable rates are so high is because I don't trust you to show up when you need to show up, either with the money or the invoice. And rates are really high to compensate for that risk. But if we can change it and I can ensure that you'll show up and you know that I'm good for the money, we have a much different construct and much lower rates. Lots of other use cases, from private equity funds. I talked a bit about that to InsurTech. There's a lot of really cool stuff coming down the pike. New industries and reinventing of old industries.
So can you, to the extent, I know some of the stuff might be proprietary or whatever, but are you able to speak on any of the exciting new projects that Provenance is shepherding in, just to give the listeners an idea?
Yeah, I mean, those are some of the industries that I just mentioned are where we've been focused. Not everything is wonderful in blockchain land. So, for instance, the stock, the Amazon example that we spoke about isn't going to happen soon, right? It's more of a 5 or 10 year process before equity trading is really disrupted, and it doesn't make sense. But most people, as you were saying at the beginning, really don't care that the trade takes 2 days and there's 7 intermediaries in between it. My experience on Charles Schwab or Merrill Lynch is fine, and I get my stock when I get my stock. It's really the more broken private assets. So private equity funds, for the reasons that we spoke about, for trading and lending, new products like whole life insurance, which is really interesting. I think there'll be some cool announcements there coming out soon. Yeah, the lending markets that we spoke about with Figure really is a pioneer in the space. They've done a lot of things that nobody else has so far, and they're going from strength to strength.
So I'm fascinated by your remark there that the trading of equities, you think in this area is still, it's not going to happen next Thursday. Is it purely just because the demand's not there? Because for whatever reason the public is complacent, or is there other things too behind the scenes that you can just see this is going to take a while?
Yeah, so coming from a big regulated bank, so I began my career at BNY Mellon. I worked there for 20 years. The systems are great bank, great people, horrible technology, trying to fix it. But the process, BNY Mellon touches 25% of the world's investable assets, I think was the last stat that I heard. And their systems are ingrained into everything the financial services industry does. And they're industrial grade. They're always up. They never break. And safety is at the core, right? And that's what you need to think about. The risk is as low as it can be. The safety is as high as it can be. And it's just going to take a while to unwind all that. Plus, and this is important, the banks and the financial services firms have almost no interest in seeing 7 intermediaries turn into no intermediaries, because their business is being that intermediary, and they're innovating themselves out of existence. And nobody likes to do that.
That's what I was wondering if part of it was that there's a lot of wealthy institutions that are sitting in the middle of that right now, and they might do various things to try to or slow the process while raising perhaps legitimate concerns. I mean, it's not purely cynical, but saying, well, gee, this system that we got up and running here, it took a long time to build it, and it kind of gets the job done before we just scrap it and go for something new. Can you speak to, just make sure people are understanding the logic, to say, 100 years from now, if people are trading shares of corporate stock off of a blockchain, does that mean would there still be like the New York Stock Exchange, and then these blockchains would be a layer above that? Or do you understand the distinction I'm making? Or would it just be?
So it's a good question. It depends on how much handholding you want. So today on an ATS, you and I can trade a security. If Amazon was listed, for instance, on the Figure ATS, you and I could trade amongst each other, and we could self-settle and self-clear, meaning we don't need any other participants. You say you want $100 a share. I'm fine with $100 a share. I give you $100. Transaction is done immediately. Now, for regulatory purposes, it needs to be on a recognized national exchange or an exempt like an ATS. So that will still exist. There'll still be technology that is regulated, and it should be, to create a fair market. Amazon itself will still need to file 10Ks and 10Qs if they still exist, or a version of those, to register with the SEC in order to ensure that they're not taking advantage of investors. But you don't need your broker, right? You don't need DTC. You don't need the clearing firms in between. You don't need custodians. If you're comfortable holding in a wallet, and whatever the version of a wallet is, I'm comfortable doing that. When I place a trade, I don't really think about where. I mean, I do because I'm with the industry, but most people don't think about where it goes and what happens to it, right? So as long as it's all about UI UX. As long as the UI UX is great, nobody really cares about what happens behind the scenes, as long as they know it's safe.
Okay, right.
Hey everybody, this is Bob Murphy. Thanks for listening to this clip from the InFi podcast. If you like what you heard and want to hear more, please consider subscribing and share this video with others. We've got new episodes dropping every Friday with more insightful discussions. Stay tuned.